Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equity markets are set to end July month on a positive note. Yes, Nifty indicates a positive start coming in for Indian equities. All three major US indexes at this point of time, or rather over the previous weekend, ended the week with gains. Big tech earnings along with economic data and central bank announcement boosted investor confidence. US inflation data slowed considerably in June. This pushed Fed now. Apparently, the expectation that Fed is closer to ending its fastest interest rate hiking cycle since the 1980s. Talk about Asian shares, look to end the month on a firm note. And let's talk about FIIs. They've been sellers. Second consecutive session out there worth sold equities to an extent of around 1,023.9 crore. And even if you talk about DIIs there, the trend is a little different. They've purchased equities to an extent of around 1,634 odd crore. Godrej Consumer Products, Muthoot Finance, along with Page Industries and Petronet and HUL are among some of the stocks which saw highest delivery. Now, also to bear in mind that the combined market valuation of 7 of the 10 firms, that is the mostly valued firms in terms of market capitalization, fell by almost 77,434 crore last week, with ITC and HDFC Bank taking the biggest hit in line with muted trend in equities. Overall, if you look at the trend that has played out thus far for the month, FPIs have pumped in a total of around 45,365 crore for the month of July itself. Now, with only one trading session left in the ongoing month, which extends the bullish streak of investing in Indian shares to 5th straight month and surpassing 40,000 odd crore figure for the 3rd month in a row. Now, earnings that we like to watch out for: Maruti Suzuki, GAIL, Power Grid Corporation, UPL, Bosch, Adani Green, Adani Transmission, Bajaj Hindustan Sugar, Castrol India, Dhanlaxmi Bank, IRB Infra, Oberoi Realty and Wellspun India are among some of the companies which will be in focus ahead of the quarterly earnings. In terms of F&O-Qs, 80 stocks have seen long build-up. This includes the like of Delta Corp, India Bull Housing Finance, RBL Bank, Ipca Lab and Sun TV Network. 18 of them have seen long unwinding, and this includes Laurus Labs, Metropolis, Gland Pharma, Indus Bank and Coromandel International. Apart from that, 38 of them have seen short build-ups, and this includes M&M Financial Services, Dr. Lal Path Labs, Bajaj Finserv, Canfin Homes and Granules India. 52 stocks almost have seen short covering, and this includes Cipla, Tata Chemicals, IDFC First Bank, Marico and Deepak Nitrite. Now let's understand stocks that are currently under F&O ban. NSE has added India Bull Housing Finance to the list overall, and that's the one in ban for now. But let us get going and discuss some stocks and strategies with Prashant Sawant, co-founder, Catalyst Wealth. Good morning, Prashant. What levels are you looking for the markets right now? And what strategy would you suggest to our viewers, both for Nifty as well as Bank Nifty?
A very good morning, Nickey, and very good morning to the viewers. So if you look at Nifty spot, on Friday, we closed somewhere around 19,650, 670 zone, which was below 19,700. For me, a major level on spot happens to be 19,750, which is say around 80-90 points from Friday's closing. And I would expect one close above this to ensure that we are out of the woods, the small selling of 2-3 days that we had and the consolidation zone. So I want Nifty spot to close above 19,750, and especially today's afternoon session would be crucial considering that it's the end of the month, and I would be looking at a close, as I mentioned, about 19,750. If that happens, then definitely we can once again look at levels around 19,900, 950. Overall, looking at the structure, I think there is a sectoral churning happening. Like we saw last week, pharma took the lead. I think metals may play a strong hand this week, so we need to keep an eye on metals. At the same time, when I look at Bank Nifty, so we are currently, the pre-open shows slightly above 45,500, whereas on Friday, we closed below that level. So for Bank Nifty spot, the crucial level happens to be 45,850. We need to close above that today. That is a monthly closing. Then we can conquer the 46,300, 400 zones one more time, and eventually even target 47,000 in the month of August. For that, one stock which has been lagging in Bank Nifty is HDFC Bank. It's going to pick up. and after picking up, it needs to trade consistently above the crucial levels of 1700. If that happens, we can see a very strong rally in Bank Nifty. So looking at both the indices, I think I would wait for today's closing and take a decision tomorrow. For Nifty, as I said, 19,750, and for Bank Nifty, 45,850.
All right, Prashant, I'm just going to address the stocks and news right now and then get back to you for further conversation out there. United Breweries, Equitas Small Finance Bank, Nazara Technologies and Gland Pharma are among some of the companies which are reported the numbers. But I'm going to address in Marico numbers first, largely inline set of numbers. Good commentary which has come in. The company has already given a Q1 update and the bottom line has surpassed estimates led by other income. Now let's talk about how the numbers have stacked up. Revenue came in at 2,523 crore as compared to the expectation of 2,500 crore in line. Volume at 3% versus expectation of 2 to 3 odd percent. EBITDA at 574 crore as compared to the expectation of 580 crore. And PAT at 436 crore as compared to 416 crore. Now the performance beat that you see on bottom line, which is 436 crore versus 460 crore, that is on account of other income, which is coming at 46 crore, which is way higher as compared to 17 crore in the corresponding quarter of the previous year. Let's talk about United Breweries. Tad below expectation of a weak quarter, any which ways, which is factored into the stocks. Net profitability down by 16%. The number came in at 136 crore versus the expectation of a number of around 160 crore. Revenue was down by 6.7% and the number came in at 2,274 crore as compared to the expectation of number of roughly 2,600 crore. EBITDA too was down by 16.5%. Margins shrunk to 9.8% as compared to 11%. Street was working with an estimate of 9.5%. So on the margin front, pretty much in line with what the Street was estimating. Equitas Small Finance Bank. Small finance banks have seen a massive uprun in the recent past. But if you look at the numbers right now, net profitability, it's up by 90%. Actually 91% to be precise. NII 28%. Gross NPA has improved. Net NPA has also improved for that matter. If you look at the overall numbers from Nazara Tech now, online gaming company, it's tad better than what Delta Corp did. Net profitability up by 70%. Revenue was up by 14%. EBITDA by 10% and margin at 13%, almost flat out there. HPCL, where the government is going to be getting in a significant stake in the company post-preference issue, but let's address the market open there. Nifty 50, we are looking at a mildly positive start coming in for the markets. 0.1% of gains coming in on that one. 19,650 odd level. That's the one for you. And if you talk about Bank Nifty, that's another one where we need to see how that is stacking up. Almost flat with a bit of negative bias. Let's talk about the small cap and the mid cap index. How is that doing? Well, a bit of in line with what the larger counterpart did. Gains to an extent of 0.1% out there. And small cap index also has seen actually a bit of outperformance coming in by small cap index. 0.5% of gains coming in on that one. And if you talk about the sectoral indices that we have, IT index seems to be faring well. Well, it's a flat start coming in for the IT index, beg your pardon there. And FMCG, a bit of profit taking on that one as well. Down and out with losses of around 0.5% out there. And if we talk about the pharma index, we have seen losses to an extent of 0.1% out there. If you talk about the other sectoral indices that we have on the chart, auto index doesn't, it's a week where auto companies are going to be reporting in not just their monthly numbers, but also quarterly numbers. Slew of the companies are set to announce their numbers. Let's talk about the other sectoral indices that we have. Metal index, it's shining bright for you. 0.5% of gains coming in for the metal index. And if you talk about the other sectoral indices, well, consumption there, a bit of weakness prevailing even for that counter, in line with what we're seeing otherwise, the trend to be playing out for the markets. Infra, 0.25% of gains coming in. Market red, 24 advances versus 26 declines coming in for the markets right now. Market red slightly. It's evenly arranged out there, but slightly favoring declines. Let's talk about the top gainers and the top losers that we have on the list. just to see where the trend is stacking up. JSW Steel, Hindalco, NTPC, these are some of the top gainers that we have. Grasim, Power Grid and Tata Motors, some of the other top gainers that we have on the screen. Hero MotoCorp, Adani Enterprises are some of the other gainers. Do remember the fact that 2 of Adani Group companies are reporting in their numbers. Top losers, Apollo Hospital, Britannia, DV's Lab, and in terms, the Asian Paints, Eicher Motor and HUL. So a bit of knock coming in for HUL and ITC. Well, if you see, it's the pharma and the FMCG basket essentially, which is among the top losers. And in the top gainers, like Prashant was indicating about the metal sector, we're seeing that trend playing out. Prashant, coming back to you. JSW Steel, Tata Steel, Hindalco, which stocks look more attractive from the chart levels?
So I think, Nickey, if you look at the current levels, 2 stocks which stand out. One is the first pick would be Hindalco, currently quoting at 455. I think one can plan the trade with a stop loss around 445. Look at targets around 475, 480. I think I'm slightly preempting a breakout over here. So it looks at a very good level. Volumes are picked up. And another conservative one would be Tata Steel. The reason being, it's comfortably trading above the 120 level, which happens to be a crucial resistance. And in fact, we had a weekly close about that. So you can look at levels around 125, 126 and keep your stop loss around 118 in spot.
Delta Corp and Nazara Technologies, both of the online gaming companies have come out with number. And I believe, Prashant, you have Indigo as your preferred bet out there, right?
Yeah. So, Nickey, the 2 stocks that I think can pan out well for the current week, one would be Indigo, and I'm looking at a stop loss around closing basis 2570 and a target around 2700, 2690. I'm expecting a good move here since the base is formed. So I'm looking at a nice move in the coming week. And one more stock would be JTL Industries. So I see a all-time high over here and good volumes picking up. I would keep a stop loss at 340 and plan a target around 475 positionally in a month and a half. So Indigo would be a short-term bet and JTL Industries would be a kind of a medium to long-term bet.
All right, Prashant, we are going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, it's that part of the show where we address the fundamental side of the story, and to address and joining us this morning is Raunak, Onkar, Head Research and Fund Manager at PPFA Mutual Fund up there. Good morning there.
Hi, good morning. Thanks for having me.
Well, pleasure is all ours. I'm going to start off by asking you about the extreme spectrum of the market's direction right now. At one place, you have FII trend, which seems to be intact, at least for the month of July. And here you have last week, which has seen some amount of market erosion in terms of, the market capitalization of the top companies. How are you looking at it? Are we looking at some sort of consolidation playing out for the markets? Do you expect FII trend to reverse anytime soon? Your perspective overall.
Thanks for the question. So if you look at the flows of FIIs, DIIs, those trends will keep continuing to flip-flop. Sometimes DIIs will be ahead, sometimes FIIs will be ahead, or they will pull back. So there is not too much of a meaningful longer-term input that we can seek from that data. If you look at some of the other indicators, if you look at India as a macroeconomy, we have been fairly stable for a while. We're coming out of the war-like scenario in our continent, or even coming out of COVID, we have accelerated some of the metrics that we have seen in terms of growth, in terms of industry, volume. So some of these numbers are looking great for now. The banking system has been stable. And more or less, we are seeing that growth has been normal for Indian economy. We don't have too many shocks that are anticipated so far. Of course, some of these things are not predictable. But so far, our economy looks stable. But if you look at some of the shorter term movements, of course, there has been a lot of valuation creep up in the past few months. And we are seeing that the market has reached all-time high. So from our portfolio positioning, we are positioning ourselves with at least 15-16% in cash in our flexi cap fund and about 18% cash in our tax saver fund. We aren't finding great opportunities to deploy meaningfully, but existing ideas where we find good valuations, we continue to add there.
All right. So let's talk about valuations in this case. Which are the sectors you think still remain attractive from a long-term perspective and also short-term, if you may so look at it that way, from a period of 1 to 3 odd months, thereabouts? Do you think pharma offers some value right now, given the kind of under-ownership in terms of FII trend, given the clearance that we're seeing from US FDA, given the valuations which are still below their long-term averages. How are you viewing that sector?
The short-term answer is very easy for me to give. I don't know actually what the outlook will be. The trends that you have mentioned may very well play out. But in the longer term, we are looking at banking, private banking space, private sector banking space, where there are these large banks who have been consolidating market share over a long period of time, and they have a good consumer franchise. They can continue to do well. If you look at some of the larger cap IT services companies, who of course recently have come across a slowdown in growth, but that happens. This cyclicality happens in this sector, and over a period of time, it adjusts. And we have seen that happen in the past as newer technologies come in, as volume of work shifts to different areas. We can see that these things also come up over a period of time. So these two sectors look reasonably priced right now. Rest of it, if you see companies that we have been liking in the past in the portfolio, we don't have too many opportunities to add to these names right now. They are not very, very expensive, but they are not at a buy range as well.
Okay, let's talk more about the mid-cap space in that case. Something like, these gold companies out there, jewelry companies, something like, PC Jewelers, Thangamil, and all of those companies which have done well in the last 1 month or thereabout. Senco Gold also, the newly listed company out there, it's done well. What's your assessment on these gold loan companies vis-a-vis something like a renewable energy space? Both Inox and Suzlon have reported the numbers. Sure, as a fund, probably limited interest, but retail investor community is closely looking at these two counters, if I may so put it that way.
I think just to give a perspective for retail investors, it's far better to look at them from a longer term point of view than to react on what these companies did in a month or what their quarterly results have been. Because some of the trends that you mentioned, so for example, gold loan has been a market in the private space outside of the banks for a very long time. And that industry is maturing over a period of time. We are seeing that a lot of these companies have become much larger players, but there is a long runway ahead of these companies. So as long as retail investors are willing to understand these market dynamics, understand the pitfalls in these sectors, I think that is something they should study if they are keen on holding on to these stocks for the longer term. If you look at renewable space, that's, I think, a phenomenal change that is happening across the world. But specifically in India, incremental capacity of power generation is going to renewables. And that will definitely see a change over the next 15, 20, 30 years. Of course, it's very, very hard to tell today how it will impact the power market, how it will impact the power supply that we are getting in. Is there a battery storage available over a long period of time to take advantage of this intermittent renewable power supply? Some of these questions remain unanswered. So in the short term, you might see a surge in demand for windmill capacity addition or solar capacity addition, and that may skew the numbers of some of these contractors or companies who are erecting these structures. But it's very, very, very hard to draw a straight line and say that this cycle will continue regardless of what is happening in the market. So I think just be cautious. That's my viewpoint for retail investors if they are really interested in looking at them from a longer term point of view.
Okay, a bit of caution is warranted within this space. Let's talk about auto in that case. You have July month data, which is going to be coming in soon for these companies. How are you looking at overall the auto space? How do you find the valuations, the EV theme? Do you find it attractive at this point of time, given these stocks have seen significant amount of uptrend already? You think there is more steam to rally of these particular stocks out there?
Stocks is difficult to predict, but if you see companies in the four-wheeler space, they have been doing reasonably well, especially after coming out of COVID. They saw a long lull in terms of volume growth over a period of time. They did not grow as per anticipation as the economy was growing, but the volumes were not catching up at the same pace. But over a period of time, personal mobility has become an important thing. Used to be an important thing anyway, but it has become more important now because people have crept up their budgets to what cars they prefer to buy. So if you see the prevalence of SUVs in the market now, which was not the case if you say 10, 15 years back at this scale. So people have inched up their budgets in terms of purchasing good quality vehicles, and there are enough good quality manufacturers in India who are now meeting the demand quite admirably. Despite the waiting periods for whatever supply chain issues that they face, they are meeting their demand admirably. So I think the longer term trend so far seems interesting that these volumes will continue to grow because there is latent demand. And as we see road infrastructure improving over a period of time, I think that seems to be a trend that is a longer term one. And we back it with the form of Maruti Suzuki. That is the only stock in the portfolio in four-wheeler space for us. And in two-wheeler space, I think there's been a very disappointing few years. They have not grown as much in terms of volume. But yeah, there are some very strong and formidable players in the market, and at that scale that they operate, I think growth should be tempered over a period of time. But yeah, both markets have different dynamics now. Although the premiumization theme is playing out over there as well in two-wheelers, but I think it's playing far better in the four-wheeler space.
All right, Raunak, a bit of a broader question out there, given the kind of fund management that Parag Parikh funds usually get into, which is also the flexi cap category out there. How would you suggest the viewers to go about with their portfolio allocation? How much percent in small cap? How much percent now in mid caps? And how much percent in the large caps? And where to bet for solid alpha in the next round of rally, if at all?
So I will answer your question in reverse, because the alpha question is almost always difficult to answer. It's very, very unpredictable where the alpha comes from, and there is no guarantee that the fund can generate alpha at all. But the flexi cap category remains interesting because it allows you to take advantage of wherever the valuation is reasonable. It can be either in the small cap space, it can be either in the mid cap or the large cap space. So at the moment, if you see small
Raunak,
and mid cap.
That's exactly my question. How are you looking at the allocation? What would you suggest? Would you suggest a 50-60% kind of allocation for the large caps? Go less on small caps? What's your strategy that you think the market participants now can adopt, given that the market seems to be a little bit in the consolidation phase right now?
I was coming to that. So I was mentioning that the small and mid cap space has become a little overheated in terms of valuations. So one could have minimal allocation to that at the moment. So in the flexi cap fund, if you our fund that we manage, if you see the allocation right now, we are more skewed towards larger cap companies because we aren't finding too many great opportunities in the small and mid cap space.
All right. And anything specific apart from Raunak, the banking space that looks attractive, maybe the consumption theme for that matter, or something in terms of other cyclicals that you're looking at?
So consumption theme has been something that we like a lot, but the companies in that theme have been very expensive for quite some time now. The only consumption stock we bought at scale was ITC, that too after the COVID crash, and we scaled that position up over a period of time. But even there, the valuations are now crept up and seem to have normalized. But the other stocks in the consumption space just seem to be out of reach for us because we don't accept the valuations that are so high in that space. In cyclicals, we have not had a good track record of investing in cyclicals, but we do have some of them in the portfolio in the form of Coal India, where we have taken a bet on NMDC, where we've taken a bet on the steel side. But yeah, these cyclicals will be a smaller part, and they're not a longer growth outlook kind of a stock. There's something which is taken care of by temporary dislocations in the market. They will provide an opportunity for now, but otherwise they will not be long-term compounding kind of ideas.
All right. And lastly, at the cost of repeating myself, how are you looking at the pharma index? Do you find value in it?
So pharma index, from my personal understanding of pharma space, over a period of time, pharma companies in India, although they have an opportunity to sell to the world, they have been hit by all these FDA issues and plant closures or export bans from many of the developed markets, especially the US. But that has not come to course. So many companies have made sure that their plants are operational and they have been able to export again. But over a period of time, the growth has stagnated because the competition is also intensified with smaller players also ramping up capacity. So in generic pharma space, I think we should be very cautious. We haven't been able to find one single idea which would take a large part of the portfolio. So we build a basket of pharma stocks where some common characteristics of these companies we like, and we build a basket which satisfies these characteristics. But we haven't been able to confidently say that one or two companies will do very well. So I think if you have a basket approach in pharma, that really helps because you are able to then diversify the risk of one company not being able to do well. But the overall market has demand. So if you see volume growth that has been there in this industry over a period of time, it has a demand, and people should be very cautious about paying too high a premium because we don't know what will happen in this in any companies in pharma space.
Sure, Raunak. Essentially, you're trying to say that a passive way of investing or just picking up the index for that matter would be a better strategy as compared to directly trading in one of these stocks, right?
You have a basket. That's my point. May not be the entire index, but if you like a few companies in pharma, build a basket of good companies which you like and understand well, that should be okay.
All right, Raunak. We're going to leave it at that. Thank you so much for taking out the time and speaking to us, please.
Thank you so much for having me.
All right. Well, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. For rest of the day, stay tuned into moneycontrol.com and Moneycontrol app.